Hi and welcome to another week ahead video. Now in this past week we saw some interesting moves in the Australian dollar. Firstly from the ongoing trade uncertainty between the US and China, and then we also saw some interesting moves in the Antipodean currency from the RBA's most recent meeting minutes, which came out unexpectedly dovish. Now in this upcoming week we think there is some interesting trades that we can take on the Australian dollar with some upcoming events. Two of them is a speech by RBA's DeBell, and then we also have a speech by RBA Governor Lowe. These two speeches can create some trading opportunities for us in the Australian dollar if we know what to look for. And then we also have two economic data points, which is construction work done quarter over quarter, as well as private capex quarter over quarter. If we see big deviations in these numbers, it can also create some trading opportunities for us. So let's jump into the video now to see exactly how we can prepare for these events and also possibly trade them as well. We'll start with our same three-step analysis process, looking at the baseline for the Aussie dollar, then looking at the baseline for the week's risk events, and then looking at possible sentiment shifts that we can look to trade the Aussie dollar with this week. So looking at the baseline for the Aussie dollar, now the Aussie dollar was pressured from a couple of points in this past trading week. This included further uncertainty about whether the US and China can reach common ground and get that phase one deal signed, as both sides made very contradictory comments regarding the progress of the deal. And then we also had the Aussie pressured with the release of the RBA's monetary policy meeting minutes. Now the minutes took an unexpected dovish turn with some comments made by the RBA, the one in particular that said the board agreed that a case could be made to ease monetary policy at this meeting. Now that was at the previous meeting held in November, and they further explained that they decided the best course of action was to keep rates steady, to give the existing rate cuts time to work, and because they recognize the negative effects of lower interest rates on savers and confidence. Now this basically meant that a case could have been made for them to cut, but they decided not to do so. And following the RBA's November meeting minutes, a February rate cut looks increasingly likely, with futures markets now placing the odds of a 25 basis point cut in November at 72%. So as trade uncertainty remains an issue and the market once again expects the RBA to ease policy in the distant future, the Aussie dollar's short-term outlook looks more bearish and its fundamental outlook more neutral. Now we expect any new trade developments to remain a key driver of the Aussie dollar in the short term, as changes in the risk tone has a big impact on the commodity currencies like the Aussie dollar, especially due to Australia's dependence on China as its biggest trading partner. So then looking at the baseline for the current risk events coming up for the Aussie dollar in the week ahead, there's a couple of interesting events that can provide us with an opportunity to trade the Aussie dollar. The first two is speeches by RBA's DeBell on Monday, and then followed by a speech from Governor Lowe on Tuesday, which is probably the one with the biggest potential for reaction. Now, these two speeches occurred just before the RBA's blackout period starts on Wednesday, which is important because this is the blackout period before the board meeting for December. So if they wanted to signal anything to markets, any potential change in policy, these speeches would be their last time to do so. Now, Monday's speech by RBA's DeBell is about employment and wages. Now, this can be significant, seeing that the previous disappointing employment report occurred after the RBA's November meeting. Thus, this speech would be a good occasion to signal to markets if the report was bad enough for the RBA to sway their thinking towards the potential of a December rate move. And then, of course, we have RBA Governor Lowe's speech on the 26th of November. Now, that is about unconventional monetary policy, some lessons from overseas. Now, we know from previous comments made by RBA members that the RBA isn't open for unconventional measures like negative interest rates and FX intervention, but there is more unconventional measures out there. And Westpac Investment Bank explains that on previous occasions, Governor Lowe seemed to have favored quantitative easing as an optional unconventional measure. Now, a clear signal from Lowe in his speech that the RBA is considering something like quantitative easing once they've reached that lower bound of 0.5% for interest rates could have a massive move in the Aussie dollar this week. So this is definitely something to watch out for. And then we also have two economic data points to look out for, which is the construction work done quarter over quarter number and the private capital expenditure as well. Now, construction work done quarter over quarter has fallen 4 out of the last 4 readings, and capital expenditure has fallen every quarter in 2019 so far. So another fall in these 2 readings would not be an encouraging sign for the RBA. So those are also 2 things to watch out for. And then looking at the potential dovish sentiment shifts. Now, the biggest sentiment shift in terms of a dovish shift from the week would occur if Governor Lowe confirms that the RBA wants to start their own quantitative easing program or similar unconventional monetary policies. Now, this would have a major dovish shift from the RBA and could provide a great opportunity to sell the Australian dollar. However, it will be very important if something like that is said to evaluate any information he provides regarding the scale as well as the timing of that unconventional monetary policy. Just mentioning that he is considering it or that he's open to it might not have the same follow-through effect in the markets. Now, another possible dovish shift could occur if either the Bell or Lowe explains that the recent disappointing jobs report that we saw after their November meeting was enough to sway them to cut interest rates in this upcoming December meeting. If none of the above 2 scenarios occur, the only other dovish reaction could occur from further misses in the construction work done and private capex. However, a miss in these numbers might only provide a short-term move low in the Aussie dollar, and it wouldn't really be seen as a real dovish shift in the currency, so to speak. Another consideration, of course, in terms of dovish sentiment shifts is the risk tone in the markets. If we have very negative developments for US-China trade talks, that can also affect the Aussie dollar negatively, with the biggest one being any news that states a phase 1 deal is no longer possible. If that happens, we should see quite a lot of downside in the commodity currencies. Then in terms of hawkish sentiment shifts, the biggest hawkish sentiment shift in the Aussie dollar would occur if the 2 speeches from the Bell and Lowe basically explain that the RBA is not at all worried about the recent disappointing labor report, and that the bank will not and is not considering any unconventional monetary policies such as quantitative easing. Another hawkish shift could occur if we get big beats in both the construction work done and private capex, as the RBA would probably welcome the recovery in these 2 data points as possible signs that the recent rate cuts might be having positive effects and spilling through into the economy. Now, also considering any major positive developments between the US and China that can also cause a lot of hawkish sentiment shifts in the Aussie. Any major progress announcements would provide support for the Aussie, with the biggest being any news of breakthroughs with those major sticking points such as tariff rollbacks, tech transfers, and IP protection. Now, how can we actually look to trade the Aussie dollar this week? Now, in the case of a dovish sentiment shift, we could look to pair the Aussie dollar with the Canadian dollar, which did see some last minute strength this week with the more hawkish comments from BOC Governor Paulos. Now, we've also seen oil prices break above their recent resistance and stay well supported throughout Thursday and Friday. So pairing the Aussie dollar with the stronger CAD can be an option in case of a dovish sentiment shift. Then in the case of a more hawkish sentiment shift, we could look to pair the Aussie dollar with the euro, which remains fundamentally bearish given the current state of the European economy, as well as that dovish monetary policy stance taken by the ECB. Now, this event will be valid for trading phase 1 trades if we do get a clear sentiment shift. Now, if you're interested to learn how a phase 1 trade works or a phase 1 sentiment shift trade works, you can check out our news trading strategy playlist on our YouTube channel, where we post weekly trade examples of how these type of trades play out. Now, if you do get a phase 1 move generated by a sentiment shift, whether hawkish or dovish, then we could look also for a possible phase 2 pullback of that initial move. And we post updates on these moves inside our tradable sentiment shift reports inside the Forex Source terminal under the Market Insights tab. Now, you can see each and every single day which current sentiment shifts are still in play and which ones are still valid for trading any phase 2 pullbacks on those specific shifts. And you can also learn about how we use these setups and how we trade them and how they work during our live analysis webinars that we hold each day inside the Forex Source terminal. Guys, as always, thank you so much for taking the time to watch this video. If you find the content helpful, if it helps you in your trading, please let us know in the comment section below. Let us know by clicking the like button and the share button. Subscribe if you haven't done so already. And as always, if you have any questions about the fundamentals, about this video that you want us to answer, make sure to ask us in the comments section below. Until the next video, guys. Cheers.